Hello traders, welcome back to the channel. In today's episode, I want to give you guys a breakdown of how I executed this GU trade pre-New York around 5 a.m. Eastern time and made me around 104 pips, about 5 to 1 risk to reward ratio. And my stop loss was pretty much 20 pips, which is very much minimum. All right. So in this video, I'm going to give you guys a breakdown from A to Z of how I executed this trade from, the high time frame market structure to marking the high time frame demand zones, to also marking the session high, session low, liquidity zones, waiting for change of character on the lower time frame, executing the trade, putting a stop loss and TB. So there's going to be a ton of information recapped within this episode. So make sure you watch this entire video. Also, if you haven't subscribed, my name is Jamal. Welcome to FOREXSOM. Go ahead and subscribe because we give a lot of value in this channel. A lot of, amazing content that could probably cost you a ton of money. But over here, you get it for free. So make sure you go ahead and subscribe to the channel. Also, if you want to upgrade your knowledge, you can get the ebook, a complete smart money trading ebook that I've written about 119 pages. The link is going to be down below. I'm going to pin it. I'm going to pin the link to the ebook down in the comments section. I'm also going to put the link in the description. So make sure you check that out. So without wasting much of your time, we are on the 4-hour time frame. So I kind of cut the price here to show you guys exactly what happened. Now I'm going to go ahead and clean up the entire thing and start it from zero so that I can show you guys step by step of what I did. So make sure you pay attention, make sure you take notes. And if you have to watch this video 2 times or 3 times, in order to grasp, what I'm explaining here. So make sure you do that so that you can get the entire information synced in. Anyways, so this is the 4-hour time frame. As usual, what I do is I go to the higher time frame to check what's going on. So here I can see that the price is creating high highs, high lows, and this is the last, a break of a structure that happened on the higher time frame. Or on the 4-hour time frame, I can see that. So now I'm gonna go ahead and mark this break of a structure. Again, if you want to know what break of a structure is, I'm sure you guys already know what this is. It basically means whenever we have a breakout on the the previous highs or previous lows, we mark it as a break of a structure, or in short, you can just call it BOS. So now that I have this BOS marked up, I can see that everything else that's going on over here is a pullback of this entire move after the break of this structure here to the left side. All right. So now that we have this break of a structure, what I'm going to be doing now is I'm going to go ahead and mark. First of all, I'm going to see if I can find any type of imbalance or any type of demand zone sitting within this move before the break of this structure to the left side. So now I can see that there's some type of demand that's sitting, this weak area right here. I can literally see it because this area is not mitigated yet. The price has to fill this entire zone. And then I can see that the price came all the way down here after creating a high, lower low on the lower time frame. So a lot of you guys have been asking me this question: if you are trading the SMC or the smart money trading concept, how waiting for this might take a long time before you find an opportunity. But also, to answer your question, you can trade this lower high, lower low, or mini downtrend on the lower time frame as long as you know what's going on the higher time frame, like the 4 hours. So I also traded this because I know what's going on the higher time frame. So therefore, I know how to be cautious, and I know where my red zone or where my demand zones is on the higher time frame. So after the break of this structure, we have 2 things that's going on over here. The first thing that's happening over here is, first we have some type of, what do you call a inducement that's going on over here. So this is your first inducement because this is not a valid, this is your engineered liquidity or liquidity, and this is your inducement right here. So you're gonna go ahead and mark your inducement. Inducement basically means enticing or tricking the traders to get into a position and then clean them out and then go towards the direction of where the higher time frame is headed. So most of the time, the big players, this is what they do. They create an inducement for a reason after the break of a structure in order to trick the traders to get into the position. So this inducement is created. We can see it, this low of this candle that created the higher high, this candle that created the higher high after the break of this high candle here. is the low is being violated or taken out, and then this is going to be a valid pullback. Let me try to see if I can make this a little bit wider so that you can see what's going on pretty much. So the low of this candle has been taken out, so this is going to be a valid inducement. So now I went ahead and marked this inducement here, calling it IDM in short, okay? And this is the liquidity or the engineered liquidity, all right, before the reversal from the higher time frame demand zone. So I also went ahead and marked this liquidity here before the tap on this demand zone on the higher time frame. So price just came back to the demand zone, and then before it hit the demand zone, it basically took out the inducement and then went all the way down, taking out the liquidity here. So now price came back to the higher time frame demand zone on the this zone here. So now what I did was I went all the way down to the 1 hour time frame. After I went to the 1 hour time frame, what I did was I went ahead and marked my Asia high and Asia low liquidity. So I used this indicator by called the kill zones. Okay, you can find this indicator if you go to the indicator section on the TradingView platform. You can type in kill zones. Once you type in kill zones, you can get this indicator by RJG Trader. Okay, you can get this indicator and it will save you a ton of time. Instead of wasting time marking the Asia high and Asia low, this thing will make it easy for you. And the setup is basically, I basically set it up. You can take a screenshot of it. I use the New York Eastern time, which you can see over here. I use the Eastern time, New York Eastern time right there. So you can go ahead and use this time zone and set your indicator Asia session, the 1700 to 2 o'clock New York session, all right, and New York time and Eastern time, sorry. All right, you can go ahead and set that up. So once you do that, basically I went ahead and marked my Asia high and Asia low using this indicator, because I can see that there's some type of manipulation going on as usual within Asia high and Asia low. All right, so that's Asia low and this is Asia high. So once I did that, I went ahead and went all the way down to the 15-minute time frame and monitored what happened over here, because you got to build your story within the you got to build your story so that you can build a case and decide either you're gonna buy or sell after you identify what's going on in the market. First of all, I identified on the higher time frame, the price gave me a break of a structure on the higher time frame, tapped on take out an inducement, and then take out liquidity on the higher time frame, and also tapped on the higher time frame demand zone. So once I had that going, I went all the way down to the 1 hour time frame. I used the Asia session indicator and I marked my Asia session high liquidity and Asia session low liquidity. This is called the buy side liquidity and this is called sell side liquidity. All right, good. So now that we can see within Asia session, there's some type of manipulation that happened over here. If you look at with your open eyes, you can see what's going on over here. First, the price took out this Asia low. So once the price took out this Asia low, it kind of reversed from this area of demand zone. You can see that it reversed from this area of demand zone, creating a higher high, breaking out the Asia high liquidity, taking out all the stop loss that was sitting over here. First, it took out this stop loss that was sitting here, and then second, it took out the stop loss that was sitting above the Asia session high, and then reversed from this imbalance or area here. Okay. Once it reversed, but it gave me a change of character somewhere here. This was a lower high led to lower low. So now this is going to be my change of character. After I marked my change of character, I'm going to go ahead to the 5-minute time frame. Once I go to the 5-minute time frame, I'm going to go ahead and mark my demand zone right here. I can see there's a little bit of break of structure going on over here. After taking out this liquidity that's sitting, short-term liquidity that's sitting over here, price went up, breaking this high and then breaking this major lower high, giving me a change of character. All right, let me mark my change of character here. Once I marked my change of character, now I can go ahead and execute my position. Give me 1 second. Now I can go ahead and execute my, give me 1 second, let me just make things a little bit clearer over here. This was my change of character. Change of character literally means a reversal, or when the price reverses from a downtrend to an uptrend, or from an uptrend to a downtrend. This is called change of character, or you can simply call it reversal. Not a big deal, okay? All right, so now I went ahead and set my trade somewhere here, because I can see that price came back to a demand zone on the lower time frame after a change of character, and also on the higher time frame. Remember, I had the price tabbing on the higher time frame demand zone, so things are basically very much aligning on that with the higher time frame, and this gives me a confirmation of entry. All right, so now I went ahead and marked my set up my entry, and then I put my stop loss 20 pips below, okay, just to be on the safe side. Remember, this trade gave me about 5-to-1 risk reward ratio, and I went ahead and set up my risk reward ratio to 5-to-1, and I'll tell you why. As I set my TB over to 5-to-1. All right, no accidents, everything is just basically plays out accordingly. All right, my stop loss goes below this structure here and below this structure here, so this is a safe zone. Sometimes you got to keep your stop loss a little bit safe, this zone, and you have to use a proper risk management while you have a proper stop loss. All right, you cannot have a sometimes you're not going to get that tight stop loss. Sometimes you have to just use the bigger stop loss, like 20 pips, which is not that bad as long as you are using a proper risk management. All right, so now let me tell you why I set my take profit to this area here. All right, I'll show you why. Okay, on the higher time frame, give me 1 second, let me just make this a little bit more visible. Okay, all right, so now let me go to the higher time frame and show you guys why I set my stop loss over here. I can see that there's some type of demand that's going on somewhere, a supply that's going on somewhere here. And why I say that this weak area here is not filled, there was an order consumption that was going on over here. Price was pushed to the downside, breaking this structures to the downside. There was a first break of structure over here. Your second break of structure was this one right here. So there's an entire supply that's sitting right there. So somehow I knew the price was going to reverse from this area of supply zone on the higher time frame. So I went ahead and marked my supply zone on the higher time frame. Great. So now that I had my supply zone set up, I went ahead and executed the trade according to the 15-minute time frame, and it played out real well. So in this video, basically, this is how it played out. Pretty much very easy. TB, right after the TB, price started reversing right after that, and then market is almost closed now, so we have a couple of minutes about before the close of this market, because it's Friday at the end of the day. Anyways, in this video you learned about, let me just go over and recap again. You learned about what the higher time frame is doing. First, what you did was you marked your break of structures of the higher time frame. You identified the price broke this structure here to the left side, this higher high, creating another higher high after the break of this previous higher high here. You can see that price created this inducement after the break of a structure. This inducement was taken out, and the price came down all the way, taking out this engineered liquidity or liquidity. Okay, and then price came down to tap on this area of demand zone, because you can see there's an enough demand that's going on over here, because this price over here, there was an order consumption that was going on. Price opened as a seller, as a pair pressure, and then buyers came into the market and they started pushing price to the upside, creating a momentum, breaking this structure to the left. So there's enough demand that's sitting over here. So the rest of the orders that was not executed by the banks and everyone that was watching this area and all the institutions, all the big traders, basically, they knew there was some type of demand that was sitting over here, and they've been waiting for it for a while. And then when it came back to this area, I went all the way down to the 1 hour time frame, and then I marked my Asia session, and liquidity and Asia session liquidity low. Market came down, took out the AG liquidity low and then went up, taking out AG liquidity high, reversing from this area of supply zone, breaking this structure, and then price on the 15-minute time frame give me a change of character after breaking this minor lower high led to lower low. Price give me a momentum of breakout, give me that change of character, and then I have this area of order consumption, which is a demand zone. Price came back to fill this area of demand and then targeted the higher time frame supply, which was here that I showed you. So this was pretty much very easy, but ton of information. I know it might be a little bit complicated at first, but make sure to watch the video at least 1 to 2 or to 3 times so that you can get the entire information synced in. And also, again guys, be aware of the scammers in the comment section. I will never invest your money. I will never help you with signals and stuff. I don't do none of that. So make sure you watch out for the scammers who are scamming people in the comment section. Also, if you want to upgrade your knowledge, you can get the link to the ebook down below. I'm going to put it in the comment section. I'm also going to put the link in the description down below. Thank you very much again. This is your brother Jamal. Until next time, happy Friday, happy weekends, peace and love.